Hi, everyone. Welcome to this week update. And market for most might not be friendly at the moment. And you must know why the market is not giving you or giving us too much of opportunities. And we are waiting for market to break through. When that will be, it's another question. When we had this run to the downside, this is DXY on weekly time frame. When we had this run down to the downside, it was a pretty quick and beautiful movement. And for more than 4 months, or since June last year, about a year now, so market has been sideways. So you must understand why it's behaving like this. For 1 year now, market has been sideways, and it's going to be like that until we see a break, probably out of here. So not much opportunity in terms of pips that you want to gather, but we have to understand what the market is doing and try to take as much as we can from the market, carefully and with risk management, good risk management. Now, we had seen that last week, the end of last week, the bears are trying to come to the market. So what they're trying to do now, it's more of a correction to me. So we're going to see a temporary drop in dollar in the coming week, but it is nothing but a correction. So if you look at what the market has done so far, from the move here to the upside, we are seeing dollar gaining strength and has given us what looks like a 5 waves to the upside. 1, 2, 3, and 4, and a slight break, which is the 5th wave to the upside. The movement to the downside is not convincing. It looks at most or at best corrective to the downside. And now we are seeing this trying to go up now to take the top. Market breaking the top here and taking this top will mean that then we are on a long correction. And so we have to position ourselves with what we are seeing. On the lower time frame, if you look here, market has given us what looks like 1, 2, 3, obviously a corrective move, but we are going to focus on this move to the upside. So far here, we can't really tell. It looks much as if we are seeing a 3-wave formation to the upside, but let's go and look at the daily time frame. That will help us to really understand the price concept and what the price is trying to do. So for now, this is the move that I said on the weekly. 1, 2, 3, 4, and a 5 to the upside. You can see that 5, it has to be impulsive. You see, with 1 impulsive, with 5 impulsive, and here with 3 also impulsive. 2nd wave correction, 4th wave correction. And we saw this like a 3 waves to me right now, like an A, B, C, of an A wave, then the B and the C wave, because it didn't break this low. So it has become an A, B, C wave. Now, here is the new movement now. And this is where we are going to pay attention to. Yeah, the movement is not impulsive. We must understand that, though it's motive in nature. Motive in nature tells us that it is corrective. We're not seeing an extension in wave 3 here. So we can see this move up to a 3, a 4, and this may have finished up the 5th wave. And in this 5th wave, we are going to pay attention. Is this 5th wave, is it completed here? So we're going to look at that. So if, from what we have learned of Elliott in terms of wave and structure, so we know that after 5 waves, we are going to have an ABC correction. So that ABC correction comes to the downside. The first place that has to be tested is this. Will it come and test this place and break it slightly to gather liquidity around this area to go up? We're going to wait to see that. So, but for now, we are seeing a move 1, 2, 3, 4, and a 5. So within this itself, has it formed 5 waves? Let's go to the 4-hour time frame. Because this move here, it's impulsive and has broken this structure down here. It seems they are trying to now correct to the downside. Now, on the 4-hour time frame, looking at this structure after the 4th wave, this is the 4th wave that I said. Okay, I need to quickly do this. So this is the first move, the 2nd wave to the downside, the 3rd wave, the 4th wave took well over a week to form. And now we had the first move, the 2nd move, and the first move here also looks like a 5 waves, 1, 2, 1, 2, then 3, 4, 5 here. Then we have an ABC of the 2nd wave, of the 5th wave. Then this looks like the 3rd wave, the 4th wave, and this looks now like the 5th wave. So it seems as if we are done correcting, and what I can see now is the move to the downside. So the move to the downside means that temporarily we're going to short the dollar. It means that the dollar is going to get temporarily weak, and our target will be decided by whatever happens here. So what we can do is to look for ABC correction. So ABC correction to the downside. So this is the first move, and this will be a B wave, then we should see a C wave. So in case you are in a buy, then after this correction, probably an 100 extension, you have to look to exit your buy because the dollar is going to temporarily get weak, and we are going to look for a sell of the dollar at least to these areas here. If I were you, I'll be targeting this place first. If price is going to go beyond this place, then it means that it has to take this support out. So how to do it really is that this is the immediate wave. So we are going to look for about 618 to 7 to 6.4 thereabout of retracement here. So which means that this is likely to be taken between here and here. We might see price before it goes up again. So what we want to do, exit your buy of the dollar around this area, look for a move to the downside, and that move, of course, should not take this area. If they're going to get more complex, then we'll know that that complexity, of course, will take the price much more lower, and it's going to be a deep correction, but we have to deal with a shallow correction for now. With that said, let's quickly go into, in case you don't understand how to exit here, let me quickly go into 1 hour time frame. I'm doing this for you to know how to exit your buy of the dollar. So for me, this is an A wave, this is a B wave for now. Then we are seeing an emergence of a C wave to the upside, and that should run it like a 5 waves. We need to take out this area. Without taking out this resistance here, the correction to the upside is not complete. So we see this as a first move of the C wave 1, 2. This might be going up as a 3rd wave, the 4th correction, the 5th, then the price will fall. That's how far I can help you with that. So let's quickly turn to euro dollar to see what we are going to do here. Euro dollar. Now on the euro dollar, so we also have seen that what the price had done, like I said, in the last 1 year, unfortunately, is to correct. So we are seeing this correction from here to here. has taken over a year. It sounds ridiculous, right? It has taken over a year because from this point here, this is June 2025, June 30th till date. That's 1 year from here. So you see that price had not actually make any long movement. It has not been trending, it has been corrective. So, but within this correction, it's what we are hoping to still get something to take here. Now, if you look here, the DXY is almost breaking this area. And that is kind of giving us an impression that we may be seeing a break lower here. But the Euro-dollar is quite far from that base. So, and we are seeing this move. So it's a contrast. But again, we have to be very cautious to think that price is going to go up and break this top now. From the DXY, price is closer here than what the Euro-dollar is giving us. So at best, let's take this as a correction for now that has to try this area without breaking this area. So we minimize our risk. In a nutshell, that's what we have to do. We minimize our risk because what the price is offering us from here to here, it's for now less than 200 pips, but it might not even be up to that. So on the daily time frame, so from the DXY, so what we had noticed is that, unfortunately here, this looks like a 3-wave correction. To the downside, it looks like a 5 waves. So that will take a lead for me for now until something else happens. If this is going to be a C wave, of course, we would have expected that price is going to go up and break the top as a C wave, which can give us a 5-wave format. But this wave formation here is not impulsive. It is corrective. So it is telling me that price, even though this is shorter to the downside, the price is going to break down. That's what it's telling me. If this had given me a 1-2, a 1-2, and a 3-4 that is clearer here, then I would have thought that the price will be correcting, and this will be the end of correction here for more upside. So for now, this is where we don't want to break. As a matter of fact, I don't want to see price break this area. Price breaking once, let's say 1.17980 means that is bullish. So we can only work within this frame, and what that is giving us for now, where the price is probably about 228 pips. It might not be up to that. If we get 100 pips or 150 pips, well, that should be enough to make something decent. But for now, the movement to the upside is 3 waves. The movement to the downside looks like, yeah, a corrective, of course, a motive 5 waves sequence, 1, 2, 3, 4, 5. And so with this formation now, I think what we can aim is a correction to the upside without breaking this place first. And if it's going to break this place, then it means if this is 1, 2, 3, 4, 5, and it's not correcting this, then we should see it as correcting the whole of this. And so the price may move between here and here. So it depends on the impulsiveness of this will determine if we're going to go a bit deeper or a bit upwards, the impulsiveness of this. But if you are selling the Euro-dollar now, we need to look for, an exit on the Euro-dollar because this is going bullish for now. So we're going to plan that and enter a buy by tomorrow. Now, what next here on the 4-hour time frame? On the 4-hour time frame, Now it's giving us that vibe. The vibe is, we can see a 1, 2, 3, 4, 5 emotive wave. This looks so much to me as if it's going to break this area. So if we are going to plug into a buy here, all we can do is to guide our trade stop loss in case they will change to come down. But otherwise, we might see price in this vicinity between 117,960 and 16,870. So within that frame. But for now, we need to look for an exit because this didn't break down. It's a truncated 5 waves of the last 5. 1, 2, 3, 4, 5. It got truncated. It didn't actually break down. So it's a truncated 5 waves. And so we're going to see a correction here now. So how do we plan an exit here on the 1 hour time frame? The 1 hour time frame here. Now, to me, this is an A wave, an A. The best actually will be to look for an 100 extension between here and now. It's different on a DXY. It's pretty much very, it has given us an equal base or height here. So we can only take this as an A right now, a B, and the one going down as a C wave, and we count our exit with this move, an 100 extension to the downside. We can't exit, or we follow, if this is an A and a B, we follow these to the downside and we look for an exit. We shouldn't see this breaking this bottom for now. So even if we get a buy, the buy should work within 63 pips before we go up. So that's what I can see. So we're going to look for an exit of a sell, then plug into a buy. I will be giving us that if you are my hub. Now let me switch back to 4 hour time frame and quickly run the other instruments. With that said, what we're expecting is a recovery of other pairs against the dollar before it falls again. That is what we are saying. So if you're going to look for a buy, maybe we should be looking for a buy within this area. If it should break this resistance here, then we should move up here to look for a buy. I mean, a sell of euro dollar. Pound dollar, I'll be looking for the same thing on the pound dollar. So the pound dollar now, it's, for me, giving me this vibe of an A, B, and this is going to correct this for more upside. This is going to probably react within this area and this area. Without bringing this stop, we might be seeing price trying to break here. A break of this resistance here. A break of this resistance here of 13577 means we are bullish. So I don't expect price to break here for now. So we might be getting a much more a bigger correction at the end of the day here. And this might just be an A and a B. So this may be going up. It might grab liquidity, yes. Break out of here before the fall. But this will not be taken. Nzdusd USD. Nzdusd USD also look much the same. This is going up. We might be seeing a much more bigger correction. This might go up, correct to the downside, go up, then fall again. USD JPY, USD yen. USD yen gave us this reaction here. So it's a reaction. So we might see correction more break to the upside before it falls. Then the last is gold. And this is where I'm going to take more time again to tell us what gold is doing. On the daily time frame, I'm going to start with gold here. And from the daily time frame to see what gold is doing. Now, gold is giving us a much more complex correction of that wave 4. That is what I'm seeing here. Now, we have this ABC of a W wave. We are taught that this will give us an ending stroke or a diagonal. You know, in this wave 1, probably we have a wave 2, and we go up. Again, we give us a similitude of what looks like, okay, A, B, C here to go up. But right now, they are broken this area. So what are we seeing now? It means as if, or to me, what I'm seeing now right now, it's like an ABC of a W, or a bigger A. The B wave in the middle here is incomplete now. So in this B wave, this is an A, this is a B wave of that B or X. We might be seeing this giving us either a running flat or an extended flat. It could come this area to give us a running flat and break down to finish up the last leg as a 5 waves to the downside. If they break to the upside, it will become an extended flat, which means an A, B, C of B wave, and it will be coming down. That is what we can see now. I hope you got that. A, B, C of A bigger A. In this B wave here, A, B, C, either as a running flat or extended flat, then we have the last leg to the downside. So is this wave complete? Let's go to the 4-hour time frame. The C wave that is coming here is going to be sharp, but as it started, I don't think that they have started that yet. Now let's look at it. What I said, A, B, C of an A wave here, then the B wave is incomplete. We're about finishing the B wave of the B. So the A of the B of the B, not yet completed. Once we finish this one, it has broken this low, but I don't think they are ready yet. And they will be going up to give us a sharp wave to the upside as a C leg. So we don't want to miss that. But now we have to concentrate on this C wave or B wave. Okay, on the C wave of the B. Yeah, on the C wave of the B. Now, within this, I said this is an A wave that is completed. And within this B wave, the B wave to the downside, before we have the C wave of the B. The B wave to the downside also, it's looking like a 5-wave structure, an ABC, which is an A B, and that we are seeing a C wave of it. So for that wave B of B, 1, 2, then in terms of the third wave of it, the B wave A, B, yes, it's A, B of B, then the C wave starts from here to the downside. So in that regard, we have 1, 2, 3, 4. So these form the borders of that C wave, of the wave 2 of it, and that it shouldn't break a 50% retracement. So if I go to 1-hour time frame now, I didn't label these, but I want you to follow what I'm trying to say here. So I didn't label these. So this is A or a W now. Then we now have A, the bigger A right now here. Then this is a bigger B of B wave, and it's going to be a bigger C of B wave. Now, within this bigger B wave of this B, so we have an A, we have a B, and after this B, we are seeing a C led to the downside. So in this C led to the downside, we have a 1, a 2, a 3, a 4. Then we should drop one more time. After dropping one more time, then we're going to see the move to the upside. So the weakness in the dollar would give us this correction and complete it to the downside. But for me, what I'll be looking at is this now. If I bring up my drawing here, so like I said, this becomes a 1, and this becomes a 2, and this will become the third wave. So, and this should not break this area before we see the last leg to the downside. So this looks more like the fourth wave than anything. It looks more like the fourth wave than anything for now. It looks more like the fourth wave. And oftentimes I've seen fourth wave behave this way. On the 1 hour time frame, if we go into it, except they decide they want to make it more complex, which is not impossible. So it's looking like we're going to see a truncation around this area. So this is like a 1, 2, 3, 4, and has behaved like that. Breaking this to the downside means is in a sell. So this may just be the first wave here of this ending structure here. The second wave, probably they have finished the third wave, the fourth, and we are going to see how they're going to grind up to finish the fifth. It might just truncate or anything, but without breaking this area of 43.10, we should see the price going down as a fast 5 waves to the downside, which may truncate or break down here. And if we have that breakdown, price may be visiting this area. If that happens, price may be coming to this area of 39.12. If that happens, if it comes here and reacts, then we should be having price not breaking this top. It's going to be running flat before they come down again. But if price should come to this area, I would not expect price to break 3,700 or 3,600. Between 3,700 and 3,600, if price should react, then it's going to give us an extended flat. So which is not impossible. So if you should have an extended flat here, then price should be going down to finish off the last leg. So that's what I can see from gold here. With that said, I've gone to the end of today's update. Do like, share, comment. Bye.